Thanks. Happy Saturday, everybody. This is Micah Lamar, and I am super excited to be here with you. We're going to talk about setting up some swing trading opportunities for the rest of March and what to take a look for in April. Just out of curiosity, how many people here have seen me present before or have been to one of my presentations? Go ahead and let me know. You're going to find I ask a lot of questions in the chat room, and I love really interactive groups, and that's what we look at. What it looks like we have today. So I'm excited about that. We're going to talk again about the #1 strategy for April 2019, and I'm going to be using a charting application that we built called Wall Street IO. And in doing so, we're going to be backtesting and validating everything that we look at today to make sure that it's a really good strategy, and we will go from there. How's everybody doing? Let's see. Yes, yes, yes. A couple people know. All right, very cool. Okay, so let's kind of get started today. The first thing that I'm going to use is probably a little different kind of chart than you're used to. How many people here are familiar with a Heikin-Ashi chart? It's a little different than your normal candlestick. I'm on Apple. I'm on a daily chart. What I'm going to do is I'm just going to flick back and forth between your Heikin-Ashi chart and your candlestick chart. And why don't we start by having everybody just kind of tell me some of the differences that you see in between these two charts. So I'm just kind of going back and forth. Here's your candle. Here's your Heikin-Ashi. One of the reasons I use this is because it really helps smooth out the trend, eliminates a lot of the noise, and makes it easier to see really good entries and exits for swing traders. But I'm going to read off some of the stuff that we have here. Lee says it's smoother. Paul says I just started using it. Dominic says they take advantage and it smooths out the trend as well. James says, Mike, I've attended one of your webinars, and Apple is rewarding at this moment with $5 signs. I love that, James. That's very cool. All right, so I like using the Heikin-Ashi chart, and I think it's really good for swing traders. Let's show some of the distinctions between a regular candlestick chart and a Heikin-Ashi chart. Here's your regular candlestick chart. This is on the same time frame, a daily candle, and you can see it's kind of choppy. It's a little harder to read. One of the disadvantages of a regular candlestick chart is that there's no clear cycles, and that makes it a little bit harder to trade from. This Heikin-Ashi chart that you see below, it's smoother, it's easier to read the trend, very clear cycles, and that makes it really easy to trade from. Most brokers, most charting applications will have a Heikin-Ashi chart that you can get, pretty much anywhere. It is important that you backtest it. I'll kind of show you how to do that today. But you should be able to get your Heikin-Ashi chart at pretty much any major broker charting applications. We built our own Heikin-Ashi chart at Wall Street IO so that we can kind of backtest it. But I will kind of walk you through how that works. Some of the main reasons to use the payday cycle method in the Heikin-Ashi chart is that it takes advantage of naturally occurring cycles. These are already happening anyways, and it makes it easier to see a stock's direction and trend. It also gives a clear buy and sell signal based on the color of the chart. It's the best day-to-day directional and momentum gauge, and I think it's better than most lagging indicators. It's got a great risk-reward ratio when used on stocks and index ETFs. I'll show you that in a moment. And it also has really great length of the cycles between 4 and 8 days, and that really makes for the perfect swing trade. I want to focus really quickly on number 4 and number 5 around risk-reward and the duration of the trade. So if we're to want to backtest Apple and trading this strategy, which is essentially buying at the close of the first green and selling at the close of the first red, it's very simple. I could just click on backtest. I've already got it in there, but let me plug it in for you. So we've got our buy and sell conditions that are basically blank. I'm going to go ahead and engage the payday cycle, which is the Heikin-Ashi. And what we're testing now is how well would we have done if we bought the first green and sold the first red. So I'm going to click on View Stats, and I've got this nice stats panel. So over the last 3 years, on average, this strategy has performed with a 1.9 risk reward. So what does that mean? Everybody here understand risk reward? Risk reward is essentially how much you're risking versus how much you have as a potential reward for your strategy. 1.9 means on average you'll make about $190 for every $100 of risk. 53% batting average. This can be improved a lot. And it's got a lot of trades throughout the year, about 31 trades a year. Okay, so one of the things that makes this strategy really profitable, and you can see the profitability up here, is that the risk reward is really good. And part of the reason the risk reward is really good is if you scroll down here and you take a look at the average win length, you have 7 days on the average win and only 2 days on the average loss. So if you kind of think about what that means for a moment is the average wins will last about 7 days, and so you'll get about 7 days of movement. The average loss is only 2 days. So when it doesn't work out, you know very quickly, and you're able to cut losses quickly. And what happens because of that average win and average loss of 7 and 2 days, it generates a really fantastic positive risk reward. Is everybody pretty comfortable with that so far? Buy on the first green, sell on the first red of a Heikin-Ashi candle. It will basically have you get into really good swing trades. I'm going to cover it in a little bit more detail here in a moment, but I just want to make sure everybody's with me. John says use it regularly. Cool. Awesome. Scott says I'm interested in learning this. You're going to learn a ton from me today. Someone says turn up my volume. You know what I could do is I could move my mic a little closer. How's that, Lawrence? Who is talking now? Larry, what's up? This is Micah from Wall Street AO. All right. James says, thank you so much, Micah. I got into Apple following strategy 2 weeks ago now. Awesome. Rewarded me greatly, and it's continuing to. Great job, James. I'm so happy that this is working for you. All right, cool. Yep. Okay, so a little bit louder, hopefully. All right, so let's take a look at some payday cycles. Again, I kind of want to go into a little bit more detail here for you. But again, the most basic idea is that with a Heikin-Ashi chart, which is different than your candlestick chart, you're able to see the trends a lot easier. It smooths out the trend. It makes it easier to see direction. And also, one of my favorite parts about it is it eliminates a lot of noise. So here's your candlestick chart. There's a ton of noise in this chart. And so I can just click H on my keyboard, actually, and go to a candlestick chart. It's pretty cool from a candlestick to a Heikin-Ashi. So you can see right away, again, the Heikin-Ashi just makes it a lot easier to see. Let me turn up my contrast. Okay, cool. Let's take a look at a couple others. So here's Apple, but let's take a look at the Qs. And I'm just going to open up View Stats. I'm going to open up Backtest. So now that I have buy on the first green and sell on the first red in my backtest, all I have to do here on Wall Street AO is click Qs. What that's going to do, it's automatically going to bring the same strategy forward onto this new ticker, the Qs, and it's going to show me the results of it as well here. So again, we have a strategy. These histograms show that this strategy has actually performed with positive returns every year for the last 10 years. That's a strategy that I like to look for. It also has a 2.1 risk reward and a 51% batting average. The batting average can be improved a ton. I'm going to show you a couple things that I do. And 34 trades a year, that's a lot. That's almost 2 or 3 trades a month. It's a very active strategy. Okay. 2.1 risk reward is really good. That means on average you'll make about $210 for every $100 of risk. So the Qs have really great payday cycles, as you can see just by looking at the chart. Visually, you can kind of see what I mean. So one of the main reasons here when we were taking a look at this is the top reasons to use this is it takes advantage of naturally occurring cycles that are already happening anyways. And I think that's an important distinction because these cycles literally are already happening. They happen about 2 to 3 times a month. They're already happening anyways, and they give you a pure directional gauge for how to get long or short a stock. And if you're a stock trader, you only trade off direction. And if you're an options trader, you also mostly trade off direction. People are always saying, oh, non-directional trades like credit spreads or whatever. Well, those trades still have a delta, which means they still have directionality to them. So that means if you can get in tune with the stock's directionality and its naturally occurring cycle, then you're going to be a lot better off trading it. Okay, so let's look at a couple other stocks. Netflix is another good one. Netflix has really, really great cycles. You can see its risk reward is here at 2.6%. Who's got another stock that we could take a look at real quick? Let's see. All right, so this is really cool because let's take a look at this now. So somebody asked for PayPal. So I'm going to hide these results over here for a moment. So PayPal is an interesting one because it just made this really great move to new highs. And the stock's been trading very well. Visually, does the stock visually look like it cycles well? And if you would have followed the payday cycle method, would you have made a killing on this? So visually, it looks like you would. And again, what we're backtesting is buy on the first green, sell on the first red. And visually, that looks really good on PayPal. However, our eyes can sometimes deceive us, and this is why it's important to backtest strategies before you make them, because when I look at the stats, it was profitable, but not as profitable as just buying and holding the stock. The batting average is pretty lousy, actually, at 44%, and the risk reward is only 1.7%. So while that's good, it's not fantastic. And one of the problems here is that you have some choppiness right here. You have some choppiness on some of the trade compressions. And these choppy factors result in a lackluster performance for payday cycles. And I think the main lesson here is that while some stocks visually look like they could cycle well, it's important to actually test them, because sometimes our eyes will deceive us, and in many cases we actually see what we want to see, and it's important to actually look at the raw data to see how profitable something was. Compare that to an Apple strategy, right, with a much better batting average and risk reward. You can see here 1.9 risk reward over the last 3 years, batting average over 50%, which is good. Okay, everybody up to speed so far? So I think the point is, again, if you're going to trade the Heikin-Ashi candle, it's really important to backtest before you trade it. Let's see, questions. All right, somebody asked for MU. Let's take a look at that one real quick. MU. Okay, so MU, because we have backtest already engaged with the payday cycle formula, here we can go ahead and test it. So our rating system actually is giving this a C minus. Decent risk reward, but the batting average is under 50%, which is not that great. You actually would have been better off using the stock. Again, one of those examples where visually it looks like it cycles well, but I think there's probably a better strategy we could use for MU. Okay. All right. So one of the problems with payday cycles is that occasionally you get false starts. And again, this is kind of what I had shown with some of the other examples like PayPal and some of the other stocks. Occasionally you get a false start. So what does a false start look like? Let's take a look at it. And I think it's important whenever you're looking at a strategy, you got to poke holes in it. You got to find where the problem areas are so that you could potentially add new rules to your strategy to improve your overall net return. Okay, so a false start would be this. This is a great example of a false start. We had this down cycle, bearish cycle. We had our first green bar, but there's no follow through. Here's another false start, 2 days, no follow through. And actually, if we're fair, there's 1, 2, 3, 4 false starts here. Let's see if we can find any more false starts. I can go back. There's one right there. Here's a great false start. Do you see how we had this big down cycle? We had a little bounce, but it did not show follow through. Here's another really good false start. So I say really good just because this was a trade that would have completely turned into a loser, right? But let's highlight it and see if we can develop a rule to avoid this, right? So there's a false start. Here's another false start. And we have a couple false starts here. Okay, so how many false starts did I identify here? Let's see. We've got 1, 2, 3, 4, 5. There's 4 in here actually, so 9, 10, 11 false starts over the last year. And again, when we look at the results here, there's 31 trades throughout the year. And I'm sure if I can keep digging, there's another false start there, so that's 12. Almost half of these trades, right? So if we have 31 trades a year and 53% batting average, then 15 of these trades are not going to work out. So the question becomes, how do we apply a secondary strategy or indicator to this strategy of payday cycles, which already, by the way, I know I'm saying 15 losers, but this strategy is very profitable even with that because of the risk reward. But the question is, how do we improve it and how do we make it even better? Okay. So one of the things that I learned is that by applying a simple secondary indicator, we can actually improve our results of this a ton. And this came after having a really great conversation with a friend of mine who's a quantitative analyst. What that means is he develops trading strategies for large banks and hedge funds. And when I asked him what are some of the things that he always puts into all of his strategies, he says 2 things. I want a short-term timing indicator. This is kind of like a trigger indicator that helps me get in and out of trades. But before that, I want a longer-term conditional indicator that helps me identify the condition of the market. So what we've just done with payday cycles is that shorter-term one. It's the best day-to-day short-term directional indicator you can find because it actually gives you literally a green or red bar that day. However, we can now apply the secondary condition to it, which in my case for Apple, I really like the MACD. Let me show you how the MACD works really quickly. The MACD is a momentum indicator that helps us identify both momentum and direction. It's pretty simple to use actually. When the MACD is crossed to the bulls and trending up like this, then we generally have nice long bullish payday cycles. And when the MACD is crossed to the bears and trending down, we generally have shorter bullish payday cycles. Okay, I've even got some slides here to show you. And the main idea behind adding this secondary thing is this idea of probability stacking. Probability stacking is when you apply more than one indicator or a condition to your trade strategy to help cut out losing trades and improve the profitability of your strategy. So what is the MACD and how does it work? Again, the MACD is pretty simple. You could see an example down here. Think of it like a momentum and a directional indicator. When the black line is above the red line and trending up, it's bullish. When the black line is below the red line and trending down, it's bearish. Okay, so here's a couple ways that you can use it. You can identify the directionality of a stock in many cases just by looking at the MACD. Okay, and one of the things that we have recognized both in our own trading and our testing is that when the MACD is crossed to the bulls and trending up like it is here, we have longer bullish payday cycles. And when the MACD is crossed to the bears and trending down, we have shorter bullish payday cycles and longer bearish ones. Okay. The other way you could use the MACD is with divergence. When a stock is making lower highs and lower lows, and the MACD starts to make higher highs and higher lows, you have a good quantifier there for a possible larger trend shift. You could also use it to help identify compression or neutral phases of a stock. So let's see how the MACD can actually improve our results of our strategy. So earlier what I did is I went through Apple with the MACD close, and I kind of went through and identified some of the more obvious false starts. I think we identified about 12 of them in the last year. And out of those 12, that makes up almost all of the losing trades that we had. So again, the question becomes, how do we take this strategy called the payday cycle, which is already very profitable by itself, and make it even better by cutting out some of those losing trades, improving our batting average, improving our risk reward? And again, we can do that by applying the MACD. So when we take a look at a lot of these losing trades and false starts that happened here, here, and here, you can see that for the most part, these all occurred during a bearish MACD. In fact, there is another one there I missed. There's a false start. And again, the MACD was very bearish during that time. Let's go to this false start. If you come down, you can see the MACD was crossed the bears and trending down. Here again, you can see the MACD was crossed the bears and trending down. Let's just keep going in this example, crossed the bears and trending down for this one too. Here's another false start, crossed the bears and trending down. And let's kind of move back, cross the bears and trending down. So what we've done is we've just identified some of the times where the MACD was incredibly bearish, crossed the bears and trending down. Now during these times, we're more likely to have false starts to the upside. Think of it like a counter trend trade. Okay, those naturally have a lower probability of success. So quite simply, if you're simply to just avoid getting long while the MACD is really bearish, you actually would have improved your batting average and your overall profitability a ton. Now, what we could do here at Wall Street AO is we could actually backtest this and check it out. So one of the cool things we built for our backtester is the ability to drag and drop conditions. So the way this reads right now is I want to buy when the payday cycle on the Heikin-Ashi chart shows the first bullish bar, buy at the close, and sell on the first red bar, bearish bar. So what I'm going to do now is I'm going to go ahead and add in the MACD. So I can simply just click and drag the MACD right up in here, and I'm going to use this as my buy condition and as well as the sell here. So what we're doing right now is we're basically now reading it like this. Buy when the payday cycle shows one bullish and only when the MACD is also confirming, and sell when the MACD is bearish. So we have a buy condition and we have a sell condition, and we're using it to test our overall performance. So what did that do to our results and our stats here? One of the major things you can see, is that it improved our batting average from 53% up to 59%. It also made our risk reward from 1.9% up to 3.1%. The other big thing it did is it changed our trades per year from over 30 trades per year to just 6 trades per year. Okay, and what that means overall is that your strategy, you'll be taking less trades, but the strategies and trades that you will be taking will be a lot better chance of success and overall a much greater risk reward. Okay. The other cool thing that you can do is if you know already that these bullish payday cycles tend to last about 7 to 9 days, you could potentially test and apply a secondary sell condition that you could use to take profits with. Because right now what we're testing is a buy condition and a sell or stop condition. But what if we wanted to apply a sell condition for taking profits? Let's take a look. What if we wanted to, instead of waiting to get stopped out for a bearish one, what if we actually just wanted to go ahead and take profits on, I don't know, the 9th bullish one? Well, we could actually test that right now. So again, one of the cool things that you could do with backtesting is you can backtest possible if-then scenarios. So like I mentioned earlier, most of these bullish payday cycles on most stocks tend to last 5 to 8 days. And at times they'll last 9 or 10 days. Those are a little rare. But the main thing is if you actually take profits towards the top and get out before you get the pullback, you're able to get out a little closer to the top and potentially become a little bit more profitable. And so that's one of the things that you can test here by having this sell condition for profits. So the way this reads now is buy when the payday cycle shows its first green bar, right, on the Heikin-Ashi chart, and also only when the MACD is bullish. And sell when the MACD is bearish or sell on the 9th bullish bar. So you have your profit condition and your sell condition. Does that make sense to everybody? Go ahead and let me know if it does. And we'll be taking any questions here as well. All right. Bradley asks, how does it work on things like on ETFs? Well, let's take a look. Let's just get down to the bare bones here. We just want to look at a basic payday cycle. I'm going to open up the view stats. I'm going to open up my watch list. And we took a look at the Qs earlier, but we could bring it back up again. Really good risk reward on the Qs, 2.1. Let's take a look at SPY. Wow, really nice risk reward on the SPY of 2.2. So there you go. Let's see. NVIDIA, somebody asked. Can we take a look at NVIDIA? Sure, let's take a look at NVIDIA. All right, NVIDIA has a good risk reward of 2. Again, what that means is on average, you'll make $200 for every $100 of risk. By the way, this strategy on NVIDIA, it's outperforming the stock. You can see how well NVIDIA payday cycles. NVIDIA is actually one of my favorite stocks to use for payday cycle analysis. Good batting average too, by the way, and very active strategy. 30 trades a year. Bob asks, is there one long-term indicator that fits best for the system? Again, I like to use the MACD. Mary says, any specific reason to sell at the 9th bar? Yeah, because these cycles very rarely go past 9 or 10 days. In fact, if you go back to Apple here, and you could go back and manually do this, but I've already done it, and you can count every single bullish payday cycle that Apple had over the last 3 to 5 years, and you're only going to find, out of the hundreds of them, you're only going to find a small handful of them that went over 10 days. And so if you know that, you now have an incredible piece of knowledge to leverage. If you know that these cycles rarely, like less than 10% of the time, go over 10 days, then it's a good idea to take profits before that, right? So you can leverage the data. That's the big thing, right? Keith says this makes sense. Paul asks about doing it in forex. I think it works pretty good. We currently don't test forex. Let's see. Question. James says it seems to follow a bull and bear pattern. Yeah, so you can trade it essentially to the upside and the downside. Exactly. So again, you can see that when you use the MACD, you could really improve your results. Almost every single one of these false starts that I highlighted here occurred during a time when the MACD was very bearish. What that also means is if you trade the bullish payday cycles while the MACD is very bullish, you tend to get these longer cycles. Take a look at these two really big cycles. This cycle went from 154 all the way to over 170. That's about a 15-point gain. This cycle currently went from about 175 all the way up to 195. That's a $20 gain. If you trade these with stock, you can make a fortune. If you trade them with options, you could make an absolute crushing, like multiple percentages greater than stock. If you trade this correctly, using our payday cycle analysis, a 15 to 20 point move like this should yield 200 to 400% at least with options if you use them correctly. Pretty exciting, by the way. It's very, very exciting. Let's continue to jam because there's a couple other things that I want to add to this system to make it even more powerful. Okay, so one of the problems, again, is that some months are seasonally more bullish or bearish, and how do we know which is which? I'd like you to introduce you to my third rule. First one being payday cycles. Second one being only take payday cycles when the MACD is confirming. Third one is use seasonality to help identify months that are likely going to be really, really strong or really, really weak. Okay, so some of the benefits of using seasonality, and by the way, each of these bars here represents 1 month. You can see the little month down here, I think, is that you can discover a possible bullish month coming up way ahead of time, like months ahead of time. This gives you a whole new perspective on upcoming trade setups by allowing you to ride longer-term seasonal moves. The second benefit is that you get an early warning for seasonally bad months of the year. This is important for swing traders, day traders, and even longer-term investors. You can see seasonally bad months coming up months ahead of time. The big benefit, though, is when you put all the pieces together, the largest moves of the year generally happen when payday cycles, the MACD, and seasonality all get aligned with each other. Again, this is using this concept called probability stacking. Rather than just using one indicator, we're applying 3 indicators together, and when they're all aligned, you get these mega moves. You'll likely trade less, but the trades that you do take will be way more profitable. And at the end of the year, these are the ones that make up the majority of most people's profits. Right? When you get these huge moves and you can make 200, 300, 400% or more on your money if you're leveraging options correctly. So let's take a look at an example. Most bullish time of the year for Apple is February, May, and July and August. We had this information at the beginning of last year, right? We had this information for 2018. The 3 largest trades of 2018, fast forward, surprise, surprise, were February, May, and July and August. And I've kind of highlighted those for you here. We have this correlation where we have these bullish payday cycles, we have a bullish cross and a bullish MACD, and we have a seasonal month that is normally just really good for the stock. And again, you can see these huge moves happen during that time. Let's take a look at a couple examples. Okay, so I want to look at seasonality, and what I could do here on Wall Street AO is just click here and check out seasonality. One of the cool things is you can take a look at seasonality way ahead of time so that you have the ability to potentially plan your trades weeks or months ahead of time. So what are some of the big months here that stick out for you in Apple? A couple of things that stick out for me is that November and December are normally not great months for the stock. Let's even look at a 5-year. Okay. November and December are usually bad months for Apple, and this is surprising for a lot of people because they think that Apple's going to get this really big rally coming into Christmas. And what's interesting is Apple actually rallies the months ahead of time. The market is a forward-looking mechanism. Apple generally does its Christmas rally in July and August and again in October, and is usually soft in September, November, December, and soft in June and actually soft in April coming up, but really, really good in February, March, and really good in May. So take a mental snapshot of this seasonality information for Apple and let's apply it directly to the chart. So again, I'm going to go back to this chart. So what were some of those big takeaways? Well, remember, we have this information all year, and some of the big things that it said was, just fast forwarding and going here in time, is that February and March are generally really good for Apple. So what I'm going to do right now is I'm just going to go ahead and highlight for you what February and March look like for Apple, literally here. This is what we've done so far in Apple in February and March. So far it's perfectly correlated with seasonality. Additionally, you can see we're in bullish payday cycles and the MACD confirmed by being crossed to the bulls, sorry. Secondly, November, December, usually really bad for Apple. What did we do this last year, November, December? We just pulled back a ton. We went down a lot. And for people who were surprised by this pullback, let me tell you, the payday cycles were bearish the whole time. The MACD was bearish the whole time. And this is information we knew last year, but November, December are seasonally always really bad for Apple. So it should not have been a surprise to see Apple pull back when the MACD is bearish, when these months are usually bearish. So if you got long during these things, then you're just not looking at the correct analysis because this information foreshadowed these pullbacks long ago. Let's continue to rewind. July and August, normally really, really good for Apple. What did we do last July and August? We had a really, really strong move. Guess when that move ended? Literally the first week of September. September, again, if you remember, September is usually bad for Apple, but July and August are good. June's bad, May is good. Let's continue to jam down this analysis. July and August usually good, September usually soft. So not only did we top out at the end of a normal bullish phase, but at the same time, right in the beginning of September, which is normally bad, we had a MACD that went bearish. Okay, rewinding again, June's usually really bad. Not only did we have bearish payday cycles in June, we have bearish seasonality in June and the MACD cross to the bears in June. So it's a good idea or a bad idea to buy calls in Apple in June when we're in bearish payday cycles, bearish MACD, and bearish seasonality. Probably a bad idea. You're taking a counter trend trade. Okay, rewind just one more time. May. May is normally a really, really good time for Apple. Well, this last May, we had a really great bullish payday cycle. We had a MACD that was bullish, and we had seasonality that's really bullish. So it's when all of these get aligned that you have these really, really big moves. Again, the other benefit is that it keeps you out of trouble. Out of trouble meaning you wouldn't buy calls in Apple when the MACD is bearish. We're in bearish payday cycles, and when seasonality is really bearish, because you're basically asking for trouble if you do that. The data is not confirming or aligned with that decision. So part of what I want to show you today is a couple fold. One, how to get in tune with these stocks that are forming natural payday cycles because they're happening already anyways, right? The second thing, how to use a secondary indicator like the MACD to help confirm how long these payday cycles are generally going to be. And is it a counter trend trade, right? Like these false starts. You're more likely to get false starts when the MACD is bearish. And number three, how to apply seasonality to a strategy so that you can actually be prepared for the strategy weeks ahead of time. Like you might want to choose to buy Apple at the end of April, write it up for May as long as MACD and payday cycles confirm, and then towards the end of May get out because you usually have a soft June. And then at the end of May, you'll be looking for a MACD to go bearish, and if that does, then that's confirming June's probably going to be bad. And for the aggressive trader, you're more than welcome to short, right? By buying puts, shorting stock, doing bear call spreads, anything with a negative delta. You have two trade opportunities there. So I'm going to open up to some questions. I hope we have some questions here, and I can see we have some good ones. So let's go ahead and go through them real quickly. Mary says, what are the time frames you could test on? Right now we're testing daily candles, and the testing goes back 10 years. Okay. You could use weekly candles as well, but we're not backtesting those yet. How does volatility affect the system? So good question. Couple things with volatility is if the VIX is high, like above 15 to 18, that normally means the market's under pressure. And if you get a confirmation that the market's under pressure or the stock you're using that's under pressure, it'll show itself every day by the chart. You'll see bearish payday cycles. You'll see a stock that continues to make lower lows, and you'll see a MACD confirm. There's no reason to bet any of your hard-earned money getting long during this time. The trend is not your friend in this case, right? So you could use the volatility or something like VIX and just confirm by the directionality given what I gave you today with Heiken-Eshi and the MACD, bum-ba-da-bum, and you could definitely use options. How would you use options, by the way? How could you potentially use this information as an options trader? Well, here's some cool things for you to consider. Right? Here's some cool things for you to consider. What do you need to know as an options trader? What do you need to know? Well, you need to know strike price, you need to know expiration, and you need to know long or short, right? Am I buying calls or am I buying puts? Well, the first one should be easy, buying calls or buying puts. If you're in a bullish payday cycle, you'd buy calls. If you're in a bearish payday cycle and you want to short, you'd buy puts. So that part's easy. The next one is How much time do you buy? Well, if you come over here to the results tab and you're looking at your strategy, well, we actually tell you how long these trades generally take. 7 days. So how much time do you need to buy for a 7-day strategy? I'd say a good rule of thumb would be to triple it. 21 to 30 days of time, triple or quadruple it, right? Triple or quadruple it. If you buy too much time, then you're over leveraging. If you don't buy enough time, then you may not have enough for the strategy to work. Okay. And the next is for targets and stop. Well, you could actually come over here and see, well, this on average gains for this strategy about 2.6%. That's about $4.50 to $5. You could use that $4.50 to $5 to both place profit targets and also to select the correct strike price. So if you like trading out of the money options, you can choose a strike price that you think will go in the money if it goes up $5. And you could use the average loss here at 1.4% to help you position size. Pretty cool stuff, because everything, of course, has a delta, right, with an options trade. Everybody up to speed? Let's see if there's a couple questions. You could definitely set it for short trades. You can absolutely set this up for a stock that you currently own. The way this backtester works here in Payday Cycles and the whole Wall Street AO platform for both backtesting things and for seasonality is we have 8,000 stocks in our database. So it's very likely the stock that you're trading or curious about will be in Wall Street AO, and you can backtest it. I recommend backtesting it before you do it. May is great. All right. Bradley asks a good question. Does your software send alerts when signals are triggered? Yeah, so that's exactly how it works. And I just haven't covered that yet. But essentially, if you backtest something like this payday cycle analysis and you like the results, you can click this follow button. And when you click the follow button, our system will send you an email notification for when the strategy starts and stops. And then you can come down here to the scanner and basically look for your strategies for all stocks, and we list out for you all your strategies that you followed. You could sort them by any of these great metrics here, or you could also sort them by our proprietary rating system. This also allows you to scan for strategies using our Discover mechanism and scan for things with highly rated things here based off of lots of good criteria that we have in our weighted rating system. Pretty cool stuff, right? So this is me. This is the person on the other end of the mic wearing my funny Santa hat and my daughter Jules. I'm a stock and options trader. One of my big goals when I started trading was I wanted to make as much money as I could without spending more than 30 minutes a day in front of my computer so I could spend time with friends and family. One of my problems was when I was first starting is I made a lot of really big wins, but then I ended up over trading. And this resulted in high commissions and a lot of really small losing trades, which created some frustration. When I discovered the payday cycle method that I showed you today, after a brainstorm I had with that quant that I told you about, I've really been off to the races with my trading. You can see this is a house that I'm building in Santa Barbara, California. Pretty exciting. This should be done soon. This is me in Phoenix getting in front of a bunch of people, teaching them how to trade options at a Phoenix option trading group. These people flew me out there to teach them the payday cycle analysis. And this is me, a great shot here at the Tasty Trade Studio. I was a visitor there. You can see this is Tom Sosnoff. He started Thinkorswim and sold it to TD Ameritrade, I think for over $600 million. Really nice guy. Actually walked us around the Tasty Trade Studios himself, which was very cool. And I've been lucky enough to meet a lot of these great people, and now I have the opportunity to help other people. So my main thing is the payday cycle analysis, and here's how I like to help people. Here's somebody I got to teach. This guy's name is Marco. He was a break-even trader from California. His goal was he wanted more consistency in his trading. His problem was that his account was flat for many years in a row. He'd make money and lose it. He was generous enough to send us a screenshot of his live trading account. You could see he made 10 grand, he'd lose 20, he'd make 10, he'd lose 5. This arrow right here is when he was started using the payday cycle formula. And you can see he had a breakout in his profitability. Here's what happened when he started using payday cycles. He made over $120,000 in just 2 weeks trading Apple and Baba payday cycles. He created more consistency in his trading, and he finally has a positive profitability curve. He now only trades a few stocks, by the way, only using payday cycles at the MACD. Here's Lisa. Lisa was a stay-at-home mom from California, or she is a stay-at-home mom. She wanted to make more money while working part-time from home. Her problem was that she struggled finding good entries and exits, and she had zero knowledge of technical analysis. By learning payday cycles from our Payday Cycle Masterclass, she created a routine, and her first year she had an amazing 86% batting average. In fact, that year we helped her grow her account from $100,000 to $320,000 just trading stock. Lisa says, before entering a trade, I always refer to my PDC, which is Payday Cycle Charts, inside of Wall Street AO. Here's how I can help you. I've put together a really great masterclass. It's called the Payday Cycle Masterclass. The Payday Cycle Masterclass is designed to create a breakthrough result in your trading, or breakthrough results. Okay, it's a 6-week workshop. What is a breakthrough result? Is a breakthrough result taking 100 grand and turning it into 150 grand or 160 grand? No. While that's a great result and the money will follow if you follow the strategy, a breakthrough result happens not only in your account but in your life. So if you're sitting at your computer and you're frustrated and you're not making any traction in your trading and you're not having a lot of fun trading and you're not happy with what you're up to, a breakthrough result would be going from that to like waking up in the morning, sipping on your coffee, feeling cool, calm, and collect, making trades, spending less time in front of your screen, more time doing other things like golfing, being with family, and getting your trading down to a very short period of time every day and actually making more money doing it and paying less in commissions. That would be a breakthrough result in your trading. This is what this class is designed for, okay? I coached a student once who turned a $300,000 loss into a $500,000 gain. It took him 18 months to do this. It wasn't overnight. This isn't like a get-rich-quick thing. This is how to get aligned with these naturally occurring cycles that are already happening anyways and create a daily routine that you can follow in a very short period of time every day and follow it every single day for months and months and months. And you know what happens is you get into the right routine with the stock and you start to create what's called cash flow. And that's why we call it the payday cycle method. You get aligned with the stock's natural paydays. Right? I checked in with this person shortly after that. They were up $2 million using the payday cycle formula. Right? So in 18 months, they were down 300 grand, made it back plus a $500,000 gain, and then they went up $2 million. It was pretty remarkable. The Payday Cycle Masterclass is a $2,997 investment. Now, I've got this along with a few other things I want to offer you today. The second thing is the 90-day roadmap. The 90-day roadmap is how to get your swing trading down to only 30 minutes a day by taking only the very best, highest probability swing trades. The Payday Cycle Masterclass is what gives you the foundation and teaches you how to get started. The 90-day roadmap comes directly after that. This is going to show you how to actually apply it into your life, what the routine is going to look like. Like if I was a fly on the wall, what would I see you do every day? The 90-day roadmap has you get started, teaches you the Payday Cycle basics and options basics. We're going to show you the best stocks to use for payday cycle analysis, the best options to use. We'll actually give you our trade journal, which will create more accountability. Then we're going to move you into more advanced strategies and the world of predictability and the world of profits through our 90-day roadmap. This is a $1,997 value we'd like to give you today as well. The third thing, this is the most exciting part for me, is we want to give you our Wall Street AO platform. With Wall Street AO, you're going to get daily email notifications for any strategy that you follow. You're also going to get unlimited backtesting, scanning, and charting. Here's what that looks like. Let's say you have an idea that you want to backtest. You're like, I like to use a moving average crossover, and I like to buy when the 34 goes above the 200, or how about when the 8 goes above the 21? I want to go ahead and backtest this, and I want to see if this is actually a valid strategy. Or another use case would be, I just read about the strategy on a forum, and everybody's saying it works great, but I want to actually backtest it and validate it because I could do that in one click here at Wall Street AO, where you can come ahead and backtest and validate it. And you could see how good the results are. And if you like it, you could follow it and get a notification for it. In just one click, we've created a one-click backtester. You could backtest RSI, stochastics, my payday cycle formula, any moving average crossover. You could backtest the MACD. You could backtest ADX, DMI, or any moving average above or below. You could also create and conditions as well as or conditions. It's a very robust system here that we've created. Now, for some people, they love to geek out on our backtester. For other people, they don't want to take the time to backtest things. They just want to be shown the best strategies. And that's when you could use our scanner. Our scanner is really cool because you can filter by strategies that you're interested in, by risk reward, annual return, stock price, average gain, trades per year. You could also filter by specific strategies. Like let's say you only want to find strategies that include the payday cycle. And then using our Wall Street IO rating system, you can look for A or A plus setups. And again, you can sort them by risk reward, batting average. The cool thing about our scanner is that our scanner is populated two ways. One by our super processor that's constantly looking for strategies in the background. But two, it's sourced by our members. We have an incredibly large member base. We actually started out as a social network before we had all these great tools. So we have a lot of members. And so when members backtest their trade ideas, our system takes the best ones that our members find and actually puts them in our scanner and makes them available to everybody. We call this crowdsourcing strategies, and it's been incredible so far. We have some really, really great strategies that have been discovered by some of our community members. Here's one on NVIDIA. Actually, let's go to Apple. You can kind of get an idea of what I'm talking about here. Here's a strategy for Apple with a 2.1 risk reward and a 66% batting average. Pretty awesome strategy there. This was crowdsourced by one of our community members. Okay, so when I say unlimited backtesting, scanning, and charting, right, you can geek out all you want on our backtester, or you could also scan for strategies in our scanner and our discovery tool. You're also going to get access to our alumni group of traders and our live trade room. And this is a 12-month access pass, a $2,400 value here for the Wall Street IO platform. Okay. Now here's a quick highlight from our membership. From Matt, he says, "Hey Mike, it's Matt Webb. I want to thank you so much for providing an amazing platform for us. Since joining Wall Street IO, I've tripled my options account, and I've been constantly learning so much. Again, thank you." So here's what you're going to get: our Payday Cycle Masterclass 6-week course, our 90-day roadmap, which happens directly afterwards. Remember, the Payday Cycle Masterclass is going to give you the foundations for trading with payday cycles. Basically what I've been teaching you today, right? Payday cycle analysis. The 90-day roadmap is going to show you what to do afterwards, how to apply that into your life with an actual routine. 12-month access pass to our backtester, our email notifications, and our scanner. I also want to give you a whole year of live coaching. Okay, so you're going to get access to live coaching via group webinar every single week, plus the replays. One of the reasons I do this is because you're going to start out here learning all this stuff, and then you're going to accelerate really, really quickly, and then you're going to plateau for a little while, and you're going to have a question like, I'm stuck here, and you're going to be able to come to the weekly live coaching. You're going to ask me your question, and I'm going to answer it for you, and then you're going to accelerate again. And then a month later, you might plateau, and you might have another question, or you might get stuck somewhere. And I'm going to be able to help you out right there, get you unstuck, and then you're going to be able to accelerate again. So rather than just giving you a training and saying you're off on your own with no help, I want to help you and hold your hand for the next year. Okay. One of the benefits there is you're going to get direct insight into how I'm seeing the market live. You get to learn and earn at the same time, and you could ask me anything. This is a $3,600 value. I literally set aside an hour of my time every week to help coach our entire group. And we have a lot of people there. It's really, really fun. You also get to meet some of the other community members during these live coaching calls. It's all online, basically. And if you can't make it live, don't worry. We archive everything for you. So here's what you're going to get again. The Payday Cycle Masterclass 6-week course. Our 90-day roadmap, going to show you how to implement this into your life with an actual routine, some accountability, a trade journal, and everything. You're going to get a 12-month access pass to the Wall Street IO platform. I'm also going to give you as a bonus a whole year of live coaching. Total value, $10,994. Today, it's only $1,997. Now, Jeanette and everybody has asked me to do something amazing for you. So as my way of saying thank you, I'm actually going to give you an additional $1,000 off when you sign up today. And I'm going to put the link right into the chat room for you. Bada beam, bada boom. Here we go. There's your $1,000 coupon that I just posted in there. Okay. So it's only $997 today, under $1,000, and you're going to get access to everything that I've highlighted. The Payday Cycle Masterclass you get, 90-day roadmap you get, 12-month access pass you get, and a bonus of live coaching for the whole year, which is pretty cool. And again, this is available at www.wallstreetio/register. Now, I've got an amazing fast exit bonus here. There's still hundreds of people here today, and so I imagine this is going to go really quickly. But for the first 5 people who sign up today, you're going to get a free one-on-one session with me. And here's what that looks like. We're going to find out exactly where you're stuck right now in your trading. We'll develop an action plan and roadmap together to profitability. You're going to get a tailored walk through our platform designed to make sure you get the most from our tools and resources. You're going to get the same roadmap that I created with one of my students who turned a big fat loss into a massive gain. It will be the same roadmap. Okay, and this is all available only for the first 5 people for the strategy call, but everybody else will get all the discounts and bonuses here and coupon. So if you just signed up, go ahead and let me know in the chat room. I'll go ahead and give you a quick acknowledgement because there's a couple things I want you to do. If you just signed up, I'd like you to email support@wallstreet.io with the subject, send me the one-on-one. Here's what our team is going to do for you right away if you sign up right now. We're going to send you our trader discovery sheet. This is going to ask you a series of questions, and it's going to help guide us on our strategy call. Things like how much time do you have to trade? What's your experience level, complexity level, risk tolerance, ability to follow rules, gauge profit targets, manage trades, trading platform, open trades, income versus growth, and profitability versus loss. I'm actually going to have you fill this out twice. Once for where you are now and once for where you want to be as a goal. And I'm going to review this personally before our call together. And so if I can look at your sheet and say, hey, this person needs some help with their ability to gauge profit targets and manage their trades, because where you are here and where you want to be, there's a gap. So I'll look for those gaps because those are the areas where we can make the biggest impact for you. Rather than having a really random broad stroke conversation about trading, we're going to actually go to work on the very specific areas of your trading that you need the most help with. And I've got a framework that I could give you for each one of these areas that'll help improve and make a big impact for you right away. Okay, so if you just signed up, go ahead and let me know in the chat room. I'd like to give you a quick acknowledgement. Please send an email to support@wallstreet.io. Say, send me the one-on-one, and we'll send you this discovery sheet. Okay, what I'd also like you to do is come over here to our university. So you're going to get logged in right away as soon as you sign up. Click on the university. Scroll down here to Payday Cycle Masterclass 2nd Edition. I'd like you to start with this Payday Cycle class. The first 5 videos are there for you right away. Payday Cycle Basics, Heikin-Ashi Candles, Probability Stacking. This is really important. The Success Framework, okay, on Module 4. How to Rate Your Trades, Module 5. The next module is going to show you how to get started with a 90-day program. I'd like you to start there. The second thing I'd like you to do is come down here to the bottom of the university, check out these quick lessons. So these are only about 1 to 2 minutes each, but they're going to walk you through our scanner, our backtester, our live trade room, how to use our charts and create your own watch list and everything like that. They're really short, should only take you about 15 minutes, but this is a great place to start. We have a ton of great training to help you get up to speed. We also have a really great support team to help you with that as well. So let's see where we are. Let's see where we are. Okay, so Payday Cycle Masterclass, 90-day roadmap, 12 months of Wall Street AO platform, and a year of live coaching for only $997. Let's go ahead and open up the chat room. We've got Rick signed up. Awesome, Rick, thank you. We've got Susan signed up. Awesome, Susan, thank you. I can't wait to meet you in our live coaching calls. Remember, for the 2 people I just acknowledged, send an email to support@wallstreet.io. We got 2 people already out of the 5. Let's see what else we got here for questions. Bob asks, is there a screener to match all 3? You can basically, if you have a stock you're interested in, you could basically just plug it right in there into the backtester. And we're also working on what you're talking about too. Bradley asked about email notifications. Absolutely. Whenever you follow a strategy, you get an email notification for it. Let's see. What's Netflix seasonality? So like I said, we have seasonality for all 8,000 stocks in our ETF and ETFs in our database. There you have it. There's Netflix seasonality. And as a member, you'll be able to look up any of these. Let's see. Mary says, very interesting how you're using Heikin-Ashi and the MACD. Thank you, Mary. So one of my last questions for today is, what has been the biggest highlight for you today? Is it using the Heikin-Ashi chart and getting or trying your best to get aligned with these naturally occurring cycles, because they're already happening anyways. These are already happening, right? So we might as well follow them. Is it Heikin-Ashi payday cycles? Is it using the MACD to confirm? Is it using seasonality? Is it a combination of everything? Is it the ability to backtest with one click? Because a lot of people, unfortunately, are not backtesting their strategies. They're just kind of winging them. And generally your results won't be great when you're just winging a strategy. We want to really know how good and how valid a strategy is before we use it. Is it backtesting? Go ahead and let me know in the chat room what the biggest highlight is. Somebody says, what is the renewal after 1 year? So good question. We're going to go ahead and grandfather you in. So we're going to give you the same discount next year if you want to stay on as a member. There's no contracts, but if you want to stay on a member, it'll be $997 again. Larry asks about lifetime membership. We can give you a 5-year membership. I'm going to go ahead and say, please email support@wallstreet.io. For that, I'm going to send this to everybody. Bradley says, I just signed up. Awesome, Bradley. Really excited to work with you. Remember, Bradley, email support@wallstreet.io. Send me the one-on-one. Fill out the sheet. It'll take you 5 minutes, and then you're going to be able to get on my calendar today. Please, I would say get on my calendar today because my calendar fills up really quickly. Okay. Okay, yes, we can backtest stochastics. Absolutely. Can you backtest regular candlesticks? We're working on candlestick conditions like patterns like bullish engulfings and things like that. So that will probably be out sometime this year. James says, God bless. Thank you, James. So Bob has a good question. Is it better to limit to just a few stocks? James, by the way, says, wow, that's awesome. Bob says, is it better to limit to a few stocks? So here's my suggestion, is that I would start with 3 to 5 stocks, right? Look at their payday cycles every day. Backtest them to make sure they're good. 3 to 5 stocks should give you more than enough trades a month, right? Because if your goal is to trade less, like 30 minutes an hour a day, you probably shouldn't be looking at 100 stocks. Many of you may or may not know that Wall Street AO actually started out as a social network, and you still have, like, as a member, you still get access to our social network, by the way. This is part of membership. People post up ideas. You get access to our live trade room. You can see it here, very, very active group. Now, before we had all these tools, we were a social network, and we used to be called Apple Trader. We changed it to Wall Street AO to kind of broaden our stroke, and I wanted to build some of these tools I had in mind. And Apple Trader grew to one of the largest communities of Apple traders in the world, and in the process, I got to meet a lot of people. I got to make friends with former floor traders and market makers, and you know what? A lot of them were what we call specialists, and here's what I mean. I would talk to one of my friends, and he would, let's say they were a floor trader or a market maker, and I'd say, hey, what are you trading today? Oh, I'm trading corn today. Well, what did you trade last week? Oh, I traded corn last week. What are you trading next week? I'm trading corn next week. Well, what did you trade last year? Oh, I traded corn last year. I'm like, wow, you're a specialist with corn. It's like, yeah, I mostly just trade corn, and I'm really, really good at it, and I'm really profitable with it. You see, one of the things about people who are crushing it in the market, they generally only have a few things that they trade, and they're just really good at it. They're called specialists. I think you're much better off to become a specialist than you are a generalist. I could tell you that none of the professional market makers or floor traders, none of them did this. None of them created a watch list with 100 stocks on them and flicked through them all day looking at 100 stocks trying to find trades. None of them did that. And unfortunately, a lot of the brokers nowadays teach you to do that. They're like, make a stock watch list with 100 things on it and spend all day looking at 100 stocks, placing trades all the time. Well, guess what? They created that as a marketing thing to try and get you to trade more so you paid more in commissions. The professionals don't trade like that. Professionals have a few stocks and a few strategies that work consistently over time, and they validated and backtested them, and they just continue to milk them. That's how they trade. And so a lot of our members actually have a personal transformation in their trading simply based off simplification. They only trade 3 to 5 things. They're at their computer for less than an hour, and they're crushing it, and they're incredibly focused. They're less likely to be caught off guard. They become what we call a specialist. And for a lot of the stocks, even the ones I showed you today, we already know they payday cycle really, really well. And just stick with the ones that are already working and already paying dividends to us, right? So yes, the question was, is it better to limit a few stocks? Bob asked, sorry for my rant. But the answer is absolutely. You're going to be much better off just sticking with a few stocks that you know trade well than trying to reinvent the wheel and, you know, look at 100 million things all day. You're going to be a lot more focused too. Pretty cool, right? All right, question. Signed up. We got a couple more people. One more person just signed up, Jerry Rogers. Okay, so that means we've got 4 signups. and we have one spot left, by the way. So when I offered for the first 5 people to get a strategy call, we got one spot left. So I'm going to post up the link one more time. I would encourage you to come and sign up with us. Bada bing, bada boom. You're going to get a $1,000 coupon as well. I also want to highlight for you a really cool message that we got from a professional group of traders. What you and your team has built is pretty incredible. We began using it as a company, and since our membership, we haven't been able to put it down. These folks have $200 million in managed assets, by the way, and they're now using Wall Street IO and our one-click backtester in their company to backtest their ideas before they put millions of dollars to work. It's pretty cool. TJ says, is Heiken Ashi candle the only thing that will work for this? So the answer is no. I use the Heiken Ashi candle because it's one of the best day-to-day directional indicators, and it really simplifies things and smooths out the chart and eliminates the noise. But if you want to backtest something like RSI, absolutely you can backtest the RSI without the Heiken Ashi. If you want to backtest something like stochastics, absolutely you can backtest stochastics. We'll even shade for you on the chart where the trades occurred, and we'll give you a whole performance stats and how many trades happen and a whole trade log of anything that you want to backtest. Absolutely, you can backtest all this stuff. It's pretty cool. And we're constantly coming out with more conditions too. D. Scott says, send me the one-on-one. Love it, D. Scott. Sounds like you may have been one of the first people to sign up. Please email support@wallstreet.io and we'll get you sorted with that, but you got to email our support for it, okay? Okay, questions. Andrew says, is your data feed real time? Yes, so our data feed is real time. From time to time, it'll be 1 or 2 minutes behind. It's certainly a lot better than end of day data or even delayed data, which can be, 15 minutes delayed. But yes, it is streaming real time throughout the day. Available candles are daily, weekly, and monthly. Our backtesting happens on the daily. You can use candlestick. You can use payday cycle, Heiken Ashi charts, or you could use seasonality, available for all 8,000 stocks and ETFs in our database. Data is included free. I pay the data for you. You do not have to pay for it. It's not an extra cost. Wally says, thank you. Awesome, Wally. Is there going to be a recording? I believe that TradeThirsty and Webinar Expo are going to send out a recording. A couple of people asking for a recording. Right now, we do not have futures or forex, unfortunately, but we will hopefully have them by the end of the year. Bum-ba-da-bum. Tom, do you have a question? Tom, can't see questions. Questions on GoToWebinar are only for the person who is there. Okay, let's see. Okay. Jerry, got you signed up. Awesome, Jerry. Very, very cool. Keith says, nice system. Larry asks for a lifetime membership. Awesome, Larry. I'm going to go ahead and say, please email support@wallstreet.io, and we'd be happy to help you with that. Bum, bum, bum. Keith says, nice system. Any other big highlights or takeaways? Renko. Renko's good. It's not as good as Heiken Ashi. All right. Good questions, everybody. Let's see. I think we went through all the slides. Pros. And I think we got one spot left on our free strategy call. And I think that's getting close to the end. So why don't we take a minute and why don't we look at a couple stocks, and whenever Jeanette is ready, she can give us the boot. But as long as people are asking questions and we're having fun, I'm happy to stay for a few extra minutes. Let's take a look. Let's answer the age-old question. What indicator works better, the MACD or stochastics? Anybody here know? Who here thinks one works better than the other? Let me know. Let me know. Let's answer the age-old question. Which indicator works better, the MACD or the stochastics? What do y'all think? Let's get feedback first, and then I'll tell you, because we could actually backtest it right here. And this is perfect. Actually, this is really cool. We have very mixed results here. We have a couple people saying stochastics, a few people saying MACD. Okay. Oh, SP is smart, says different things. They're measuring different things, right? All right, cool. And okay, cool. So which one works better? Well, we can find out. We're going to test, what do we test? 1 year, 3 year, 5 year, 10 year. Let's test a 3 year. And so I'm going to open up the stats panel right here, and I'm going to click on stochastics. And immediately it's going to pull up a performance grid of stochastics. I have a funny question for you, but have you ever seen a backtested engine that was so fast? So I'm going to unclick this. I'm going to click it again. Watch how fast this is. I'm going to click it. Boom, 1 second, and you have results. There's no other backtester, by the way, out there where you can click a button and in 1 second get results. So here's the stats of just the stochastic on Apple. Okay. Let's do this on the SPY. How about that? Or maybe the Qs. So we have an index ETF to use. Okay. The stochastics has a 1.3 risk reward. It's not great. And a 44% batting average, but it has a lot of trades. Okay. Our rating system actually by itself is giving this a D+ rating. So probably not the best one. The most important thing to notice is stochastics is a very fast strategy, only 4 days. It's only 4 days. Okay. I would say this probably isn't a strategy that's worth your time. Not with stochastics. Let's take a look at Apple with stochastics. Okay, so I'm going to load up stochastics again. A little bit better risk reward. Okay, batting average, a very active strategy. But again, when you look at this, it only lasts 4 days. So here's a way to think about this. And actually, let me pause for a moment because I'm going to now load up MACD. So who said stochastics and who said MACD? We know what stochastics was. Let's compare that to MACD. MACD, 2.1 risk reward, better risk reward. Look at this, better batting average. Here's the important part to think about. Only 9 trades a year versus what it was at 50 trades a year. And this has a much better rating, by the way. So I would say the MACD is a better indicator for Apple than stochastics. But here's the kicker. Stochastics was a 4-day trade. I'm coming down here and I'm looking at frequency. 21 days. These are trading days, not calendar days. You can see in our system there's 187 people actually following Apple MACD. 21 days, that's about a month. 22 trading days in a month. So the MACD lasts like 4 or 5 times longer than stochastics. So maybe a better question is, rather than is stochastics better than MACD, a better question would be, how long do you want to be in your trade for? Just 2 or 3 or 4 days? Or do you want to be in it for a whole month? Getting in tune with these monthly cycles is actually pretty darn good. You only make 9 trades a year, but they're going to be way more profitable trades. I'd actually say MACD wins, but it's a longer trade. It's a longer trade. Now, how can you use this information as an options trader? Let's say if you wanted to use the MACD. Well, you know its average gain right here, 6.3%. That's pretty good, right? That's going to be worth about $10 at least. Average loss only 3%. That's what generates the good risk reward, by the way. When your average loss is only 3% and your average gain is 6.3%, I'll even zoom in. Do everybody see this? This is what generates a positive risk reward relationship. Okay, and then you know that you're going to be in it for 21 days. So remember our rule of thumb? Let's triple it. So if you know the strategy lasts a month on average, maybe you should buy 3 months of time. And if you know you can expect about 6% out of it, then you know where to set your profit targets. You know approximately also how much you're risking. How do you do that? Okay, so check this out. If you have a $200 stock and your average loss for the strategy is 3%, then that's a $6 potential move against you, $6, right? So what happens when you buy 100 shares of stock at $200, right? And you know that it's got a $6 move down. What happens if it moves down $6 with 100 shares? How much do you lose? Let's do a Q&A. How much will you lose? If you buy 100 shares at $200 and you know the average loss is 3%, which is $6 down, how much will you lose with your 100 shares? $600. Good job, Dick. Right? $600. If that's too much for you to risk, you can't buy 100 shares. Maybe you can only buy 20 shares or 30 shares. Let's say you only wanted to risk $300. Well, then you can only buy 50 shares. So you could use this data to actually help govern your position sizing. How do you do that as an options trader? Well, what do you suppose an at-the-money call would be? If you're going to buy an at-the-money call, it doesn't matter if it's 30 days or 3 months out, what's the delta going to be? Let's see. Let's see what everybody says here. What's the delta? 50, 50, 50. Okay, everybody's on track here. If you buy an at-the-money call, your delta is about 50. Let's say you buy 10 of them. What's your position delta? If you buy 10 at-the-money calls with a 50 delta each, what's your position delta? Let's see who could get this one right. So far, SP, we got Dick, we got a few other people all saying, okay, Mary came in first, 500, that's correct. So let's walk through this together. Let's say you wanted to get long this strategy. You know beforehand, right, which is important, you know beforehand the average gain is 6%, the average loss is $3, and you know beforehand that it generally lasts about a month. Well, now you have expiration. You could also use this average loss for your position sizing. So if you buy 10 at-the-money calls with a 50 delta each, you have a 500 position delta. If the stock drops by $6 and you have a 500 delta, how much did you lose? What's 6 times $5? That's what you do. 6 times the 500, right? So if you have a 500 position delta and the stock drops $6, how much did you lose? Let's see who can get this one right. SP says $3,000. You got it absolutely correct. You'd lose $3,000. And you know what? You know that ahead of time. You know it ahead of time. And that's the benefit to be able to look at a strategy and be given its average gain and average loss. You know ahead of time what you're risking. Because if you can't risk $3,000 on this strategy, then you can't buy 10 calls. You can't buy 10 calls. How much can you risk? Well, maybe you're like, well, I can only risk $1,000. Well, then you can only buy a few calls, right? Because you can use this data to actually identify the average gain and the average loss potential of each individual call based on its delta. Which, by the way, I know I covered that quickly. If that kind of stuff is interesting to you and you're like, wow, I'm not measuring my potential reward and I'm not measuring my risk and I'm not using data to position size, you're like, wow, I would suggest signing up purely for our Payday Cycle Masterclass, because in the Payday Cycle Masterclass, one of the first things we teach is the success framework here in Module 4, which teaches you, here's exactly what it shows you. In this lesson, you'll learn how to use the results and data from a strategy on our platform to help gauge profit targets, manage risk targets, and also help with position size. And we cover an example for stock and option traders, right? So rather than just guessing, you're actually using the data, using real data, right? Pretty cool stuff, right? You have a lot of power when you can leverage the data. And I think that is one of my biggest takeaways here. Right. Are there any other questions? TJ has a really good question. Isn't any indicator that you learn to use correctly and consistently okie dokie? I don't think so. I don't think it is, because not all of them are profitable. Not all of them are good indicators. And not all of them are a good match for the stock you're using them on, right? Not all of them are a good match for the stock you're using them on, right? Just like we showed with PayPal earlier, the payday cycle formula looks visually like it would work, but it would not have produced very good results. So you could just grab any indicator and use it, but your results may not be great. Wouldn't you prefer to test that indicator to make sure it's a good indicator first? You'd actually be surprised. You'd literally be surprised how many people come to us with ideas and they're like, yeah, this is really, really great. And they give us the idea and we backtest it and it doesn't work, like never. It rarely works. And if they continue to use that, they're never going to make money with it. So part of our process is in backtesting is, one, to find really great trades, but also to debunk strategies and debunk trades that will never show good profitability. And wouldn't you prefer to know which strategies are better than others, like really to leverage your time? Don't you want to be using the best one rather than just some other one? But good question, good question. Fareed says, can you send the link again? Absolutely. I'm going to post it right here. This is the link to sign up. How far does the backtesting on the data go? 10 years of data you can backtest. Mary asks about Canadian stocks. Unfortunately, we don't have those quite yet. I'm so sorry. We have Amex, NYSE, and NASDAQ data. Kevin says, do you ever use Fibs or Elliott Wave? I occasionally do. I occasionally do. From time to time, I do. I do have to let you know that Because Wall Street AO started as a social network, one of the benefits to that is that we have several people who grew up in our community who post and contribute to our platform. One of them is Andy Fetter. Andy Fetter is one of the smartest traders I know, and as part of your membership, I didn't even have time to cover this, but as part of your membership, you're going to get access to not only payday cycle analysis and stuff like that, but to other cool pieces of analysis. One of them is through Andy Fetter. He does Elliott Wave and really cool market updates. Just to let you know, you're also going to get access to our whole live meetup schedule, including an income trading session every Thursday, day trading session Monday through Friday. Some of our members like to day trade as well, so we include that. And then this is my swing trading session on Mondays, my live coaching on Monday. You'll get access to all of that cool stuff. So I don't personally use a lot of fibs, but I know a lot of our members do, and Andy Fetter actually teaches that here on our platform. So when you sign up, you get access to all the backtesting stuff, but inside of our community, we have such a big, deep community that you'll probably hear people talking about Elliott Wave, about day trading, about forex trading, about all this stuff, although our platform and data is mostly for swing traders. Okay. Mary says, okay. Any other questions? Somebody says, can we take a look at Tesla? Okay, so what do you want to back test with Tesla? You just want to look at the chart. Tesla looks like, just from a chart perspective, we do have some support around 250. Whatever happened to going private at $420? I like Tesla, the company. I think their cars are amazing. The stock has been having some trouble and is basically caught in a range between $385, $386, and $250. We actually have some pretty decent strategies for Tesla. Here's a strategy for Tesla with a 4.6 risk reward and an 80% batting average. Holy cow. Look at this one. This is very, very cool. You can see the shading on the chart is when the trade occurred. 1, 2, 3, 4, 5, 6, 7 trades. 7 of the last trades worked. I'm not going to show you. If I clicked on backtest, I would show you what makes up this strategy, which I'm not going to do because I want to reserve that for our members. But it's an A- setup, which is pretty good. This happens 7 times a year. It's got an 85% batting average with Tesla, 4.8 risk reward. One of the more impressive things is you can see how this stock has been going sideways. This white line on our profitability panel here, this white line shows you the stock. You can see it's been going sideways, while the strategy itself has been going up and up and up and up and up, right? This is a marks of a really good strategy. When the stock goes nowhere and the strategy just keeps profiting. Not bad. I really like this. Actually, in fact, I'm going to go ahead and follow it. And so now I'm going to get a strategy every time Tesla strategy starts and stops. That's pretty cool. Wow, 85% batting average. Very impressed. Okay, what else do we have? Somebody have another stock? Let's see. Yeah, Kevin says maybe the SEC problems. Okay, somebody asks for Adobe. Let's just do a couple more and then I've got a jet because I've got 3-year-old twins at home. Anybody else here ever have twins? Holy cow. I got a boy and a girl. All right. Adobe. Best strategy on Adobe, a B+. It's not an A, but it's still pretty good. 3.5 risk reward, that's actually really good. And 64% batting average. And this is kind of interesting. Do you see the one right below this? Sometimes strategies, when the batting average goes way up, the risk reward goes down a little bit. You can see that happening. The batting average goes up to 84% here, but then the risk reward goes down to 1.1. Let's do a poll. Who here would rather have an 84% batting average but a very slender risk reward or margin? Or would you rather have a 64% batting average and a 3.5% risk reward? That's much better, I think. Much better risk reward. But you can see it does a pretty good job of catching this stock. Pretty cool, huh? Let's see. Let's see. Yeah, SP says 3.5 and 64, much better. Most people would go for that one. Yeah. TJ says, how many indicators can you backtest at once? Good question. So here's the way this works under backtest is we've made this smart. So let's give ourselves full screen here. Okay, we got just one more minute here, but here's the way this works is it's a back tester that's drag and drop. So I could say, I want to test buying when the payday cycle starts, right? But only when the MACD, but only when the MACD is also starting. And I also want to test buying when the payday cycle starts, but only when the stochastics is also confirming with it. Do you see now I have two buy conditions I'm testing here? Let's go ahead and clear this out. Okay, and then I want to sell when, I'm gonna do this here for you. Sell when it goes bearish on the payday cycle, or when the MACD is bearish, or when, you can see how I'm kind of building this strategy, or when the payday cycle is bullish for 9 days. Okay, so let's see how this actually reads. And our system can handle this and more. So I want to buy when the payday cycle starts and when the MACD confirms, or I want to buy when the payday cycle starts and the stochastics confirms. And I want to sell when we have one bearish payday cycle, or when the MACD goes bearish, or when we have 9 bullish payday cycle bars. This is the profit condition right here. Do you see how I can stack these up and keep stacking them up? Some of our best strategies that are discovered by our community members are kind of built this way. They're creating conditional elements in the market that says, here's an example. Buy when the payday cycle starts and sell on the 9th day when the MACD is bullish or when the stock's above the 50-day moving average. Or if the stock is below its 50-day moving average, sell on the 4th bullish day. Because if you think about it, if you're going to buy at every bullish payday cycle, if you're able to create a conditional order that says when it's likely to be a really long cycle, take profits on the 9th day, but when it's likely to be a shorter cycle, take profits on the 4th day and test that whole thing under one strategy, you have an incredibly powerful strategy to apply. And I hope I'm not geeking out too much here, but our backtester is ridiculously awesome. One-click backtester, but it's incredibly robust. You can backtest and stack all the probability stuff you want. It's really, really sweet. People who, I was actually talking with a guy last week, and he's like, oh, I've spent the last 10 years kind of geeking out on trying to build my own backtester, and I probably spent 1,000 hours doing it. And then I signed up for yours, and he's like, your backtester by itself was worth the price of the membership because it's literally going to save me 1,000 hours where I don't have to build my own test or write my own code. I could just click one thing and have it done for me by your system and then get notifications for it based on the notification system. It's pretty cool. All right. TJ asked how many indicators you got. Here's what we have. We have stochastics, RSI, payday cycle, moving average cross, MACD, moving average, DMI, and ADX, and we're constantly adding more. Boom. Walter says into the scan, yes, they're organized by the best by our rating system. You can absolutely test shorting. All right, folks. I think that's just about a wrap. Were there any other questions? I think we probably filled up on these first 5 people, but if you want to come and sign up, we're going to leave this $1,000 coupon open for you for the remainder of the weekend. Okay? So if you want $1,000 off for Wall Street AO, click the link, come and join us. I think you're going to be delighted. We're giving you our Payday Cycle Masterclass 6-week course, our 90-day roadmap, 12-month access pass to our platform, and a year of live coaching for under $1,000. It's a pretty incredible offer. I hope to see you at our next live coaching call, which is this Monday. Go ahead and click the link and sign up. And I think we're pretty much wrapped up for the day. So thank you, everybody, for being here. I know there's a lot of places you could have been on your Saturday, and I appreciate that you've taken the time to advance your trading and come to our session today. So thank you very much. Any other questions or big highlights from today, go ahead and let me know. Richard says thank you. TJ says thank you. Any other big highlights, let me know.
I'm here. Can you hear me?
What's up, Jeanette?
Hey, you.
Good session. This has been a great group. I'm really excited with how everything went today.
Good. I appreciate you waiting because we were delayed and sticking around and answering all the questions. It's awesome. I appreciate you.
Yeah, absolutely. We had some really great questions come in. So I think that's pretty much a wrap. Was there anything you wanted to add?
Nope, I'm going to dismiss you, and then I'm going to throw my deck back up with your link, and then close this thing down for everybody.
Awesome. All right.
All
Scott
right.
says
Have a
great
good
presentation, by the way.
weekend.
Okay, cool. Thanks,
Go play
Jeanette.
with those babies.
I
Okay,
will.
bye.